We are joined by Abhishek, the Deputy Vice President Research at Sharekhan and by BNP Paribas, joining in with us. And Abhishek, very good afternoon, and thank you so much for joining in with us. Right now, we did hear Shrishti give us a lot of details in terms of the festive season, the cheer, and how it accounts to around 8 to 10% of the sales numbers that come in also during this Ganesh Chaturthi festival, especially. So that is the part that she was talking about. I want to understand from you, what are your expectations this time from the festive season? How are you looking at it in terms of the September sales numbers?
See, broadly, if you see that this September is not a like-to-like comparison with the previous September, because what has happened that in September 22 there was a Shraddh, and now because of this Adhik Maas, as per the Hindu calendar, in this year the whole festive season has been shifted by 15 to 20 days. So that's why we may see better retail sales on a YOY terms. We will see strong growth in the retail sales, but maybe on a YOY basis the wholesale growth would not be the same. Second point is that I'm agree with the what Shrishti has talked about the Onam sales and the Ganesh Chaturthi side. The same feedback we have got from the market. But now what would happen in the September that most of the players would build up an inventory ahead of the festive seasons. 42-day period festive season started from the first day of the Navratri. And segment wise, whatever she has talked is almost right. What we are looking at this point of a time is more of the direction. Month on month, we are expecting a single-digit growth in the most of the segments, except in the tractor segment, where we see strong double-digit growth, mainly because of the low base effect that is on a month-on-month basis. In a CVEC segment, it is a seasonally strong month because of in a September, people used to advance their purchases to take the depreciation benefit, and as the Tata Motor has announced for a price hike, so it may also it may also push fleet operators to prepone their sales, and we may see strong sales in the CV segment. In the PV segment, it is more of a production side. Otherwise, most of the players are sitting on the strong order book. Although the demand has been continued to shift towards the SUV side, entry level segment and the rural segment still has to pick up. But on the premium side, demand is okay, and we may see the inventory build up ahead of the festive season of the PV segment also. In the two-wheeler segment, things are still dicey. Entry-level segment has yet to pick up, but there was a healthy momentum that we have observed during the Onam and the Ganesh Chaturthi side. So on base of that, and the past trend suggests that on the auspicious occasions and on the festive season and the marriage season, even the rural demand or the entry-level demand comes back. So we are expecting that phenomenon to play again during the festive season, and we are hoping positive side on two-wheeler demand from us.
Right, Abhishek, let me push you on the two-wheeler demand a little bit more to try and understand and break down for our viewers as to what's happening in that space. Of course, India is the largest consumer of two-wheelers, or very close to there. How do you see the demand evolving? Because we've always spoken of the demand coming back, but it's not really come back in a big way. Do you expect that to happen sometime in Q3 of this year? How should one look at it?
See, when you talk about the demand side, then you have to break up it into the two things. One is the entry level, second is the about 125cc in the premium segment. So premium segment side demand is okay. Demand is coming, and that is being somehow substituting the shortfall in the entry level segment. Whatever is happening in the entry level segment is the true reflection of your economy. If economy wise the low income people are not doing well, then definitely that demand would be shifted. But one trend you would observe in Q3 is that because of this additional hiring in this last mile connectivity or last mile serving organization like Swiggy and all these things for the logistics purpose during this festive season, you may see an institutional buying would come up during this festive season from the entry level segment. But these are all at least for next 6 to 8 months, we may see here or there in the entry level segment until or unless the rural segment or the lower strata income group would recover completely. That thing would continue. But interesting thing what is happening in this year is that the mass market players are now focusing on the premium products, and more than the volume growth, they are focusing on the margin expansion. So that we have a thesis that for FY24, the earning expansion would be more driven by the margin expansion than that of the volume growth. So whatever be the volume growth trend would be there. Additional to that, what we're expecting, that would help companies to report better than expected numbers.
Right. And Abhishek, if I can push you further on with regard to valuations as well, we've seen the Nifty Auto Index really rally this year, 30%, nearly 30% up year to date. And all of that rally has been in the last 6 months or thereabouts. How should one look at valuations? Because we've seen some real good performance in terms of returns from lots of stocks, including the likes of an M&M and a Maruti now really joining the party.
See, if you see that the valuation has moved up in line with the earning expectations, and the critical thing what I'm saying that in this year is happening that the OEMs are not focusing too much on the volume growth. They are focusing on the margins, and for margins they are increasing the prices, and second they are increasing the premiumization across the categories. So now the street has got a confidence that even though the volume growth may not be in a strong pace that we have seen in the last year because of the high base, we may see high single digit growth in most of the cases, or mid single digit growth. But on the margin side, that street has been confident that we may see a healthy expansion in the margin, and that would drive the earning performance. So this shift in the valuation side or shift in the investment towards the auto side is more in expectation of the margins, and we are comfortable that that would continue. If you talk about the valuations, that valuations are still not significantly ahead of the what we have seen in the last 5 to 10 years. But if you see that the Hero MotoCorp is still trading at 14-15 times, Bajaj Auto is at 20 times. Now, what is happening that these mass market players are entering into the premium segment, Harley and Triumph. So they are deserving a kind of a re-rating. If you talk about the Maruti, in that case, the contribution of the SUV segment of the high-end product is increasing. So that itself demands higher valuations. If you talk about the Tata Motors, then it's a complete change of the business. You can say that once it was focusing on the volumes in the CV segment, and now talking about the double-digit kind of a margin in the CV segment also. So when you're the quality of your profitability is increasing, that would require that would deserve or demands for an higher valuation. And now Street has accepted that the margin trend would continue at least for 2 to 4 quarters more from here. And when the economy would recover, even on this largely on the rural segments and the lower income strata side, then we may see a volume recovery phase. So we are not so much concerned about the valuations as the earning visibility picture has been extending.
Okay, surely keeping an eye out on those stocks over there. Thank you so much, Abhishek, for joining in with us this afternoon, giving us an understanding in terms of what should we be expecting in terms of auto sale numbers as well as their valuations as well. But